Tech. Well, let's bring in Shi Chow, the financial advisor for UBS Global Wealth Management, and Phil Camparelli, portfolio manager of global allocation at JP Morgan Asset Management. Guys, welcome. Shi, what do you think about what we're seeing happening in tech and how the individual investor strategizes around it going forward?
Well, thank you for having me here. I think the market in general is very emotional right now. A part of the reason is we're expecting a pretty strong, post-pandemic economic recovery, but at the same time, we're worried about inflation. So you see these big swings in tech, and we certainly believe that tech is going to be the future, especially with this digital transformation that's going to stay permanently. So when we come out of this pandemic, we're going to see more importance in tech. So this is certainly a time to add into tech, but selectively, and also balance your portfolios.
Yeah, so Phil, what's the right weighting of tech? It doesn't have to be all or nothing, but tech has run so far, and some of the valuations, even if tech is the future, these valuations are counting on it. So what's the right weighting?
Yeah, John, we should have saw this coming today. So today's March 9th, and crazy things happen on March 9th. It marked the day that stocks stopped falling in 2009. Last year, if you go back, oil prices dropped 25% on March 9th. So we should have bought a lot of volatility today because it's March 9th. So the answer to your question is we have about 9% of our fund in a growth manager. Now, that's really not very much change from last year. The difference, though, is that we've allocated more to value. Now, John, these are great companies. These are companies that are meeting earnings. They're beating earnings, and that's going to continue to happen. But you have to make room in your portfolio for what we're considering a very high-class problem, which is folks really getting their portfolios in order and making sure that they have enough value as things get better. And this powerful dynamic of fiscal stimulus plus an extraordinary vaccine rollout so far to date, right? And the third thing being a consumer whose savings rate is double long-term averages. That is going to be a really nice tailwind for value stocks. But don't ditch the growth stuff. Just make room for value away from passive investing into active managers that can navigate the reopening.
Shepard Smith here. Thanks for watching CNBC on YouTube.